Holy smokes, everyone. Today we are doing a boots on the ground report for the construction industry, for the housing market and everything that's going on, because things in the housing market lately have been absolutely crazy, okay? But with some new economic data we just got, and look at this, another new construction here. With some new economic data we just got, mortgage rates are skyrocketing. In the US, the 30-year fixed rate spiked to 7.25%, and we could see mortgage rates hit a new high. But first, what we have to talk about is what's been happening in the housing market, okay? Interest rates have gone up at their fastest pace ever, and a lot of people thought, well, this is going to at least create a housing market correction of around 20%. Now, in many areas, the housing market, there's more construction going on here. In many areas, the housing market did crash or correct 20% or even further. Let's wait for the truck to go past here. But what you have to understand is the averages. There might be areas that go down 30% and areas that go up 20%. So really, when I'm talking about the housing market, you know, every state's different, every capital city's different, and even in the capital city, every suburb's different, and even in the suburb that you're looking to buy in, there's good parts of the suburb, there's bad parts of the suburb, kind of like, you know, the saying, wrong side of the tracks. Here's a few more that have recently been finished, okay? So there's a big mixed bag, you know, in America, around LA, California, a lot of the premium end of the market has fallen over 20%, and there's still parts of the market that are still going up. In Australia, there was pockets of Sydney. A new report came out that some suburbs were down over 30%. And then there is some suburbs that are still going up, and now we're seeing a rebound in housing prices in Australia as well. But again, these are just the averages. But what I'm seeing here in this new housing development, okay, as we go around here, there's lots of homes being built, but nobody's working. We're all the construction workers. You know, also what I'm starting to see, a new trend is for sale signs for these construction homes which aren't finished. Because what happened is, a lot of people can actually buy land before it titles, you know, 12, 18, sometimes even 2 years before the land titles. You know, there'll be a developer, they will go and buy up a big piece of land, and then they'll cut them up into blocks and sell them. Now, what many people did is they brought land about 18 months, 2 years ago. Okay, here's another house. No one's doing work on this house as well. What a lot of people did 2 years ago is they went and they brought land when interest rates were at zero. Well, now what's happened? Interest rates have skyrocketed from zero in Australia to 4%, in the US 5%, and now there's going to be much more rate hikes coming. So all these people that brought this land about 12 months ago to 18, 24 months ago, all of a sudden, a mortgage that they thought would have an interest rate of 2 to 3%, they're now having to pay 6%, 7%. And also construction loans tend to have high interest rates. Okay, so now they're going to be in severe pain. But what everyone is shocked about is, why hasn't the housing market crashed yet? Well, there's been a much bigger lag than everybody has thought. People have been a lot more resilient than a lot of people thought. We got the jobs data, which I already did a video on, where jobs growth grew at 497,000 jobs. Now, a lot of people did comment on, and I completely agree, what's happening is the cost of living is going up crazy. And so a lot of people are needing to get a second job, third job, to see what, you know, just to get by, just to keep up with the costs, because things are getting absolutely crazy. And also, like people pointed out, you know, if you work an hour, you're considered employed, which is absolutely ridiculous, you know. So that's one thing. Record immigration as well. People are only working an hour, 2 hours. People getting second, third jobs. Okay. So this has caused bonds to skyrocket, which is what we've seen around the world. It wasn't just the US. This is now happening in Australia as well. As I'm recording this, the markets in Australia are absolutely tanking, down around 2%. So what we're going to see is more interest rate pain. Now, I think a reason why the housing market hasn't crashed yet is because not enough people have started to sell their homes. But here in Australia, coming up to spring, a lot of people will start selling their homes. In the US, I think we're going to see more inventory come up as people get squeezed by insurance costs going up, property taxes are going up. It's just so we're going to need to wait probably another 6 months before we start to see inventory go up. And it's only been this record low inventory for the reason why the housing market hasn't crashed, because people don't have options. Again, this is just the averages. Some markets are going down, some aren't. But on average, there's been record low inventory. But what do you think will happen when a few more houses come up for sale? Again, this is another development, guys, here. The street full of houses, nobody working on them. What do you think is going to happen when more houses come onto the market and people all of a sudden start to have a bit more choice and flexibility on what houses they want to buy? Well, buyers will start to have more power and they can start to negotiate more and ask for lower and lower prices. And for example, someone that's on a fixed rate now of 3%, 4%, and they say, well, the housing market won't crash because I'm not going to sell. Well, what happens if your neighbor sells? If he sells and he sells his house for $100,000 loss, well, if you go to try to revalue your property to take out equity, or you just want to see how much your house is worth, well, the person that does the valuation, they will look at comparable sales. So even if you haven't sold, if your neighbors have sold, okay, and they're selling for 100K less, well, then your house is going to lose value. Now, what's happening in the rest of the world besides America, in Australia, UK, Canada, etc., is this mortgage cliff that's going to be coming. Now, some countries, their banks are going to work with homeowners a lot more. They'll let them go interest only, which won't work out well. They'll let them take equity out of their home to keep doing their repayments. They'll let them extend the loan. We're even hearing now people doing 40-year mortgages, which is absolutely crazy. So that's all going to delay the correction that needs to happen. We need this correction to happen because house prices are just getting absolutely out of control. In some places like Sydney, the average house is 13 times somebody's income. And same, for example, in LA. You got houses for $1 million where people are making where people making $70,000, $80,000. It's just ridiculous. It's unsustainable. So everyone, this is just a warning. What I'm seeing in the new construction right now, a lot of people, they're getting their homes built, but there's no one really working on them. And I think what's going to happen, or what I am seeing in these new developments, is I'm starting to see a lot of homes for sale from people that decided to build about 2 years ago, where now their interest rates are skyrocketed and they can no longer afford the home that they were planning on building. But again, the housing market has been very resilient, so I think it's going to take another at least 6 to 12 months before we see a serious correction. And this is all based on the fact if the central banks actually do their job. Okay, the reason why the crash hasn't happened as quickly as I thought, or my timing's been wrong, is because I thought, silly me, the central banks will actually do their job and lift interest rates until the job's done. Because it's not very complicated. What's their job? They got 2 jobs. It's very, very simple. Price stability and full employment. Well, according to their metrics, we definitely have full employment. The jobs market is absolutely nuts, but we don't have price stability. So why the heck are they pausing, everybody? Why are they pausing when price stability is still skyrocketing, the cost of living is crazy, and we've got full employment? Really, there's only one option. Just keep lifting interest rates. It's not that complicated, until either inflation goes back down to 2 or 3%, or we enter a severe recession. Now, I'm sure the economy can handle negative growth of 0.1 or 0.2%. Okay, we'll be fine. But until one of those things happen, they need to keep on lifting interest rates. But everyone, what do you think about this? What are you seeing in your local areas, in your local housing markets? Are you seeing a lot of people on these job sites? Or are you seeing, there is maybe 1 or 2 working, but this is in a state of, 100 new homes being built. Also, if you're wanting to learn how to build wealth and master the cycles of gold, silver, and Bitcoin, prepare for the next downturn, you can click the link in the description below. My course is 50% off right now. It's still in the pre-launch phase. When it's finished, the price will be doubling. It's only fair as more content comes out, it gets more expensive. But again, everyone, what do you think? Let me know. Thanks for watching. You're awesome. I'll see you all in the next video.